All right, guys, let's quickly take a look at the RBNZ policy decision outcome that we had a couple of minutes ago. Now, remember last night when I did my preview, my expectation was for the bank to actually leave rates unchanged today, to leave them on hold. But what we got instead was a cut from the bank. Now, that didn't surprise money markets per se, because money markets was pricing in 75% chance of a cut already, but it definitely surprised a lot of market participants, me included. You know, the economist community themselves was siding more towards a hold, and in my opinion, that made that was the decision that made more sense to me. Yes, the data that we've had recently has shown downside surprises in growth. We saw downside in pricing expectations or intentions, downside in hiring intentions. So there were definitely reasons for them to cut rates, but those reasons would have also allowed them, with things like non-tradable inflations in focus, those things would have also allowed them to stay patient until the next meeting, right? So basically leave rates on hold today, but then potentially look to cut rates at the next meeting. That would have made a lot of sense in my view. What they did instead is they cut rates, which, you know, from a policy point of view, it's pretty bad, because, you know, you literally 3 months ago, they were still looking at potentially hiking rates, right? Hiking rates. Now, 3 months later, they're like, oh, wow, you remember when we said we were looking to hike rates and only start cutting Q3 next year? Well, we're bringing that forward a whole 12 months, 3 months later. So from a optics point of view, it looks really bad for the bank, right? That was one of the things that made me think that there was a higher probability that the bank would want to leave rates on hold. It just made more sense. But like I mentioned last night, and I think this was, in hindsight, it was a pretty good tell, was all of those press conferences that was scheduled for Governor Orr. If I just quickly open up my calendar here, just give me a second. I have the stream one on, but not the regular one that I use. Let's quickly take a look. Here we go. So if we take a look at all of these press conferences, this was the one thing that I said last night could make me wrong, right? It's the fact that we had apart from the press conference, we had 4 separate interviews scheduled for Governor Orr. Now, like I mentioned last night, you know, this for me was the biggest risk to my call of a hold, is the fact that why would he want to put himself out there on 3 separate or 4 separate interviews and a press conference if they weren't going to make a big decision, right? If he didn't feel that he had to put in enough time with the media to really explain their decision, then a hold probably wouldn't have made as much sense, right? So obviously that's in hindsight. And again, my view is that they should have left rates on hold because optics looks really bad. But like I said last night, all of these interviews now makes a lot more sense, right? It shows us that they were planning to cut rates. Now keep in mind, you know, most of these interviews were scheduled ahead of their actual decision. So they obviously had a really good idea in mind of what they were going to do when they scheduled these press conferences, but these interviews rather. But again, you know, in my expectations was for them to leave rates on hold, but they obviously cut rates against my expectations, but in line with money market expectations. Now, in terms of the overall OCR path, this is where things got a little bit more dovish than what the markets had anticipated. If we quickly take a look at our scenario planning for the event, we knew that a cut was already baseline expectations, but because it was only 75% price, there was obviously going to be a lot of surprise even if we got a cut, which meant it would have been dovish. But the main focus for us was on what they had to say about the OCR going forward. If you cut today, as they did, what do they see them doing in the future? And their things were pretty dovish for 2024, more in line in terms of 2025. Why do I say that? If we quickly take a look at what we looked at yesterday, we said that if they were to look at something like 3 cuts this year, which is what their OCR projections for 2024 suggest, that would have been seen as pretty dovish by the markets. We got that as a dovish check mark. In terms of the 2025 projections, though, they came in pretty much in line with what the broader consensus that I was talking about yesterday was looking for, a number close to 3.8. So we got more dovish on the 2024, but pretty much in line with expectations, I would say, in terms of 2025. Still dovish, right? Compared to, I mean, geez, like it compared to May, it was still going to be a very dovish shift. Hence my reservations about them cutting in the first place. But, 2025 wasn't as dovish as consensus was looking for, but 2024 certainly was. Now, in terms of trading this, I mean, I had an incredibly bad fill on this one. My fill for this came in close to 109.77. And the only reason why I got that fill was I wanted to see two things. Obviously, we got the cut and that got the markets moving. But then I wanted to see what they had to say about their projections for 2024. And by the time that I saw the 2024 and 2025 OCR projections and I hit the button, that's basically where I got my fill. So it was an absolute horrendous fill on a trade like this. It would have been much better to be positioned for this ahead of the event, but that would have only made sense if I believed there was a greater probability of them cutting rates, and I believe there was a greater probability of them holding rates steady. There were a few of you that traded this into the event, and I mean, you guys would have made a killing on this trade to the upside. So well done for you guys on that front. Now, in terms of how I managed that, very simple, as I always do. I took a unit profit as we slammed into the implied volatility high for the session, which came in and around the 109.92 level. I then moved my stop to break even, which was very soon after that, probably 10 minutes, not even 10 minutes, maybe 5 minutes after that, if it was that long. We saw a big push to the downside, spiking me out of my remaining units. Now, I'm not looking to chase this even higher, even though this was a more dovish than expected decision from the bank. The only reason for that, well, let's say two reasons for that. The first reason is we obviously have to navigate through the press conference as well, right? So I am expecting the bank to come out dovish in the press conference, but there's always a risk that they might sound slightly less dovish than what the OCR suggests, right? The main reason, though, for why I'm not looking to chase this right now is just positioning. We know the markets have been massively short the Kiwi for a while now. If we go to currency strength here, they've been massively short the Kiwi. We saw the Kiwi move into stretch short territory with last week's data as well, the updated positioning information. So if this was vice versa, right, if this was a hawkish decision with positioning stretched on the short side, I would have looked to hold on to that trade a lot longer, right? I wouldn't have been as aggressive with moving my stops up. I would have allowed it just to run a little bit, because you would expect a much greater, you would expect all of those shorts to have to force liquidate their positions, forcing price even higher. With the markets already being pretty short, I don't have as much conviction to want to just hold it, which is why I traded this fairly tight to the chest, and why I'm not looking to really chase this higher as well. Now, in terms of the RBA versus the RBNZ, your baseline expectation is that this pair could just grind higher now, because there is that obvious policy divergence between these two, with the RBA last week telling us they're considering rate hikes, and now the RBNZ obviously cutting rates and telling us they're going to do a lot more of it. So there is that obvious policy divergence that we can look to express. But again, with the currency already fairly short, I'm just a little bit more reserved in how I'm looking to trade that. But let's see, if the press conference comes out and the bank and the governor stresses that the OCR could potentially be even more negative than what they suggested, if they come out like super dovish, there could obviously be more opportunities for us to trade that. But for now, I'm just staying patient after being taken out with my remaining units at break even, and we'll see what the press conference has to offer.